Equity Research at William O'Neill is with us on the show. Mayuresh, we've often been talking about your portfolio recommendations, your picks. I want you to start off today's conversation by telling us the top 3 triggers. What will be the driving trend which will help investors make their portfolio decision? For instance, do you think margins will expand in the auto segment? I'm just giving a random example, but do you think margins will expand in XYZ sector and therefore you're recommending a buy? Do you think that inflation is going to start hurting the spending power of people? The consumer wallet is going to start shrinking, and therefore you are going to go negative on the consumer discretionary sector? Do you think revenge travel is going to moderate? Just throwing up some examples, but tell us the top 3 triggers in your mind, 3 trends as we step into the first half of the year.
Afternoon, Reem. Afternoon, Prashant. Afternoon, Mangalam. And wishing all of you, your loved ones, the entire team at CNBC and all the viewers, season's greetings and a very happy new year as well. When it comes to the entire market context in the first place itself, we'll more or less get into a rally attempt because it's been 3 days since the intermittent bottom has been formed on the O'Neill lens, and that intermittent bottom has not been taken off. So from tomorrow, I think we'll wait a follow-through day, which is a move of 1.5% or more on the index with extremely heavy volumes, which should substantiate that the kind of bottom that has been created might be short-term in nature at this point of time. Coming to the context in terms of what might look good, specifically in the first half, at O'Neill, we've always believed the 3 aspects. One, earnings trajectory extremely strong. So the EPS growth in the preceding 2 to 3 quarters growing at 20-25%, and a similar note in terms of an annualized basis as well. The second element in terms of the overall perspective of the business, whether it's top-line margin performance, the ROE should be reasonable enough and more than 17.5%, and it should be backed by extremely strong institutional volumes and institutional holding as well. If you combine these 3 factors and then put it on our sector rotation graphs that we've got on PanRay, which is our institutional software, 3 sectors probably emerge, Rima, at this point of time. One, capital goods stroke infrastructure, where our own belief is that a lot of initiatives that have been taken over the past few quarters, more capex is expected to come through from the government side, both as we approach the budget and the general election 4 to 5 quarters down the line. These orders are coming with better margins, and the execution track record with strict timelines put in ensure working capital constraints remain minimal on the balance sheet, which ensures healthy cash flows and healthy earnings that get reported by these capital goods stroke infrastructure companies as well. The second thing that we're probably looking at within the broader spectrum is energy as a basket. And though we are speaking about a lot of initiatives taken here as well in terms of renewables and targets set for the next 5 to 10 years from the government side, a lot of work probably being done on this part of the business segment as well. It comes to corporates as well. Energy as a space looks very, very interesting when it comes to the earnings trajectory over the next 2 quarters, to say the least. Third, I think in terms of both the private capex expected to come through and what can come through as a budgetary announcement as well, utilities stroke defense players can very much remain in focus in our opinion. Order books are swelling up, margins have been relatively better for these players as a whole. Execution has improved, and I think the cash flows which come into reported earnings remain very, very good as well. I think 3 broad parameters on what we're probably looking at over the next couple of quarters on the O'Neill.
Hi, Mayuresh. Your thoughts on Devyani International and the QSR space? Devyani International has picked up some pace currently, sitting with a gain of almost 6.5%. This week it's been up 9%, but it didn't participate earlier in the week where we saw some big moves in the likes of Westlife as well as Jubilant Foodworks. Sapphire still remains an underperformer here. Your thoughts on this space?
Afternoon, Mangalam. So very, very interesting space, I think. You follow it more closely than I do, Mangalam. But what largely goes through in terms of both the same sales stores growth, what a lot of companies within this spaces are operating in terms of their operating metrics when it comes to the next few quarters. They're adopting a very asset-light model. If you go through the transcript of most companies within the space itself, tier 2, tier 3 towns is where the maximum amount of growth is expected to come through. As discretionary spending patterns improve and with more product offerings coming on the table, both in terms of menu offerings as well as the price points at which they're getting offered, I think the expansion that will probably go through over the next few quarters and has been going in the past few quarters as well, clearly augurs well in terms of the overall volume growth for these companies as well. when you've seen stickiness in margins over the past few quarters, margin improvement is on the anvil for these companies as well. Again, input costs, largely as a variable in terms of the overall top line, is expected to go down, and expectations in terms of operating leverage being on balance sheets over the next few years can be very, very evident. So yeah, I think very, very interesting space. The only hitch that we've got is it's a little bit away in terms of the pivot points that we've got, of the buy ranges that we have in terms of the RS strength for most of these stocks. But yes, interesting space. If they gain price strength, we'll definitely be having a look at the spaces.
Mayuresh, you don't track any of the Rane Group companies, do you? They're all up, 5 and 20%, at least 4 of these names from the same group. Do you track any of them?
So afternoon, Prashant. Track Rani Madras to a large extent. And again, I think the news of airbags, which has come through, I think the potential for this market itself is pretty large. Now, we've heard these news on numerous occasions in the past few quarters. So I think the obvious players who gain momentum, Rani Group is buzzing in today's session because of the entire perspective that they've got in terms of the brakes, the sensors, the bag materials that might be required, and the safety material itself. Other stocks as well in the larger universe as well. No direct coverage out here, but I think stocks like SRF, which probably have a large exposure in terms of the bag material, something like a Century Enka, which has got a huge exposure in terms of the nylon cord filament segment, almost 47% revenues come from that, varied applications in terms of bag materials needed for airbags. I was interested in hearing out a spokesperson from ICRA as well. The content per car is expected to go significantly higher with more automation coming through, more systems-driven approaches being adopted by OEMs as well. So yes, I think there is a lot of scope out here. We will be selective, as I said, wait for a follow-through day, and then probably have a look at either of these stocks, which are probably breaking out on reasonable volumes and where the earnings trajectory is expected to reach.
Do stay on. Need to get into a very short break. We'll come back. Last 5 minutes of the day's trading action will be coming to an end.